Hello traders, and welcome back. It's me, and in this video, we'll be doing a quick fundamental analysis of the gold price. The gold price bulls seem to be a bit reluctant at the moment despite the modest USD strength. However, the downside seems to be cushioned by a number of factors which we'll discuss in this video. But before that, please consider subscribing to our channel and hitting the like button for more daily trading insights. So let's get straight into it. As you can see, the gold price is moving sideways for the last couple of days. And this sideways movement came after the sharp jump on Friday when the US jobs report was worse than expected. Now, this is not really surprising because very often the market will do a U-turn after a big move. However, unlike in a normal sideways market where the bulls and the bears are about equal, here the bears seem to have the upper hand, as the overall sentiment is slightly bearish. This is reflected in the slight increase in short positions, as speculators are becoming less bullish on the gold price. Now the question is, what is keeping the gold price from dropping more? Well, there are several factors at play here. First of all, even though the overall sentiment is slightly bearish, the commercials are still holding a large net long position. This means that the big money institutions are still betting on the long-term, bullish trend of gold. And as long as this is the case, we can expect some buying pressure whenever the price drops. Secondly, as we discussed in our previous videos, the gold price is in a very strong uptrend in the long run. So even though the price is currently below the 200-day moving average, this doesn't really change the fact that the long-term trend is up. In other words, the current price action is just a pullback within an uptrend, and pullbacks are generally good buying opportunities. Finally, the gold price is highly influenced by the USD price. And as you can see here, the dollar index is barely moving sideways. This is actually a bullish sign for gold, because if the USD starts rising sharply, then we can expect the gold price to drop. But for the time being, the USD is not really strengthening, which is preventing the gold price from falling. So for the time being, the gold price is likely to remain under pressure. However, we should see some buying interest near current levels, as the downside is somewhat cushioned by the factors we've discussed. In other words, the risk-reward ratio for gold is starting to look attractive again, and this should bring in some buyers. Of course, the ultimate decision on whether or not to buy gold depends on your own analysis and trading strategy. But I think that current levels are much more attractive than they were a month ago. For example, if you want to learn more about our gold price forecast for 2022, make sure to check out our gold price forecast video. We publish new videos every single day, so there's always fresh content coming up. If you enjoyed this one, make sure to hit the like button and subscribe to the channel. See you in the next video.